Trade tensions between the U.S. and China driving gold to its highest peak in 6 years, now reaching more than $15.50 in early trading. But it's not just here in the U.S. Similar highs were seen in the euro and the Australian dollar as well. So is this a sign of investor nerves ahead of a looming recession? For that, let's turn to Peter Schiff. He runs Euro Pacific Capital. Peter, great to see you. So what do you make of this gold spike? Is this an indicator that a recession is in the offing?
Well, first of all, we haven't really spiked yet. We've been gradually trending higher. And it's not necessarily because people are worried about recession. They're worried about what the central banks, and in particular the Federal Reserve, is going to do about the next recession. That's why the price of gold is going up, because the Fed is going to be going back to zero. They're going to be going back to quantitative easing. And all of this is good for gold. In fact, gold has been making record highs in almost every currency except the dollar. And I think ultimately we're going to make a high in the dollar probably before too long. And, you know, when the Fed did quantitative easing the first time, the reason that the gold rally stopped at 1900 was because everybody believed that the Fed had an exit strategy and that they could reverse the process, normalize interest rates, unwind their balance sheet. When they realized that they were mistaken to believe that there is no exit strategy, that it's basically QE forever, that the balance sheet is going to grow in perpetuity, gold's not going to stop next time. It's going to keep on going.
And speaking of keep on going, this keep on going trade war with China is obviously driving much of this global fear. According to Trump at the G7 summit, he's saying China wants to come back to the table for more talks. Could we see an end to this tariff spat? And what might that do for our economy?
Well, you know, I think the tariffs or the trade war is a bit of a distraction because the U.S. economy is going into recession regardless of what happens with trade. And, you know, the trade war certainly makes a bad situation worse, but it was a bad situation anyway. And I think a lot of people have some false optimism that all we have to do is, you know, end the trade war and we'll avert recession. That's not going to happen. Now, I don't expect the Chinese to just surrender. I do think that they're digging in their heels, and so this trade war could continue beyond the next election.
Well, speaking of that, Peter, the Trump administration seems to be, I guess, in recession denial, if you will. Do you think the Trump Treasury will make any dramatic moves to kind of stave off a recession that would surely shake up his reelection campaign? What might that look like? What moves do you think they could possibly make to stave off a recession?
Well, first of all, the Trump administration and Trump himself are in denial about a lot of things. But, you know, I'm not really sure what they could do to delay the onset of the recession. I mean, the recession is inevitable, and the problem is the more they delay it, the worse it's going to be. Now, it's already going to be very bad because they've delayed it for so long, but Trump is more concerned about getting reelected, and so he doesn't care if he exacerbates the severity of the next recession, even though it may come on his watch if he actually gets reelected. I don't expect that to happen because I do believe the recession will start prior to the 2020 election. And I think the Fed will do what it can to avert it. They will go back to zero. They will do more QE. We may even get some type of tax cut or increase government spending in a vain effort to try to stimulate the economy. But that's not the type of stimulus the economy needs. We need less government, not more government. We actually need higher interest rates, not lower interest rates. But even if we do the right thing, that's not going to avert the recession because the recession is part of the cure. And we need to embrace it, not resist it. Unfortunately, politicians will never do that because they're more concerned about their own reelection than about the long-term health of the economy.
Yeah, so, okay, it sounds like we have to get worse before we can get better. But in the meantime, where does the average Joe need to put his money? You know, if he's fearful of, you know, another crash like we saw in 2008, does the average Joe go to gold? Do they go to real estate? I mean, what do they do? Where do they put their money?
Well, I think gold's going to go up whether or not the stock markets crash. In fact, the only way to prevent the stock markets from crashing is to print a lot of money and slash rates, which is really good for gold. So, yes, people should be buying gold. Don't think that you've missed the boat if it's at 1,530 and you haven't bought. We're going a lot higher. Remember, we were at 1,900, so we're well off the highs. There aren't that many assets that you can find that are off their highs like gold, other than silver, which is probably an even better buy. It's much further off its high, so you could buy silver. If you want to take risk, you could buy the mining stocks. Because there, I think the upside is far greater. I manage my own fund, the Europe Pacific Gold Fund. People can check that one out. EPGFX is the symbol for my gold fund. There are others out there. And then again, people should just be investing outside the U.S., outside the dollar. The dollar has been the beneficiary of a lot of these trade concerns, but ultimately the dollar is going to be the biggest loser in not only the trade war, but in the movement away from the U.S. dollar as the reserve currency. Look, you've had even the Bank of England making statements about, the dollar's time is coming to an end. We need another reserve. I agree, but gold is going to be the reserve. Gold was the reserve before the dollar, and it will be the reserve after the dollar. So people should buy it now. Don't wait for that to happen, because when we remonetize gold, the price will be much, much higher than it is today.
Well, there you have it. Precious metals have been a thing for over a millennia, so it sounds like we got to go back that way. Peter Schiff, as always, appreciate your expertise. Thank you.